Hey, hi, good morning, guys. Sorry for the technical difficulties you're facing. Just to check if you guys can hear me. Okay, let me just straight away proceed with today's presentation. As you can see from the title itself, it's a Singapore budget review. It'll be a relatively quick and short one. Okay, as you all know, our Ministry of Finance just released their budget in last Thursday or 2 Thursdays ago, and we have come up with a view. A bit too late, but then we do have a view here to share with you guys. Okay, let me go straight into the presentation. Okay, very important thing here to note that this year's budget is on expansionary fiscal policy. So what does it mean? You can see from the slides, this statement was actually taken directly from Mr. Heng Swee Keat, our Minister of Finance, in his budget speech on the 24th of March, which practically sums up what the whole budget was all about. As you can see, the first title, cyclical weakness. So there's actually a cyclical weakness happening around the globe, and therefore they've actually adopted this expansionary fiscal stance. So what does this mean by expansionary fiscal stance? Meaning that there'll be more physical stimulus or spending going forward as compared to last year as well. And then this would most probably, according to their calculation, creates a positive physical impulse of slightly over 1% of the GDP. And of course, the final point here, which is very important as well, is that you can see this together with the relief measures targeted at SMEs will provide support in the near-term future. A very important thing to note is that they are targeting SMEs this time around as they refocus their budget on businesses and particularly on SMEs. So we'll go a little bit more in depth into the expansionary fiscal policy and what do I mean by that. If you look at this table here, it's actually the budget from last year as well as the budget for financial year 2016. As you can see, within the primary surplus and deficit, there's a increase in spending, therefore an increase in primary deficit. I'll go on later on to explain why there's a lot of, it's actually a positive overall budget. It's a surplus, but on the primary side, it's actually a deficit. Primary meaning operation revenue minus of total expenditure. As you can see from this table, your operating revenue is only budgeted to be about 68 billion, and your deficit is actually about the expenditure is actually about 73. So therefore, you create a deficit about 5 billion. And you can see here 7.3% increase in total spending. So this is the additional spending on top of last year, which actually increased by 20% on top of 2014. So going further into explanation of the expansionary fiscal policies, like I mentioned, the primary deficit is actually it's actually a primary deficit, meaning operating revenue is actually more than your total expenditure. However, the overall budget is actually a surplus. What do you mean by overall budget? Overall budget will include your items listed down below. As you can see, special transfer as well as net investment return contribution. Why is it a budget? Because special transfer was hugely reduced by 40%, and your investment returns contribution actually increased by 48%. It is quite normal. I mean, just to share an interesting fact, it's quite normal because this is the new term. This is the first term for the new government. Therefore, all the previous surplus that was accumulated will be locked out in reserve. They will never be able to use it for this year's budget. That's why the budget is generally very prudent, and the special transfer are usually a bit lower. Your special transfer includes items like your CPF, your MediSave top-up, your Pioneer Generation top-up, your post-education top-up, all these schemes that was initially started by the government a few years back. So depending on the situation, they can top up by a few millions. So in this year, the top-up was relatively muted because it's the first term of the new government. However, like I mentioned, overall budget has increased due to two factors, simply special transfer and the increase in the investment return. The increase in investment return contribution is due to the fact that they are putting Temasek Holding into the calculation for the NRRC, in short for net investment return contribution. And Temasek Holding is postulated to increase the whole NRRC by about 3% of the GDP going forward. This is an important thing to note. It's not just a one-off effect. In fact, it will be included into the NRRC going forward. However, like I mentioned, although the overall budget has been a surplus, we are running a primary deficit, meaning operating revenue is actually less than total expenditure. But this cannot last forever. Our Singapore government being a very fragile nation, we are very exposed to exogenous factors, including regional economy doing well or not. Therefore, our government have always been very prudent in managing this deficit, and they've always tried to maintain a primary deficit. In fact, it's only in these 2 years, financial year 2015 and financial year 2016, that we are seeing a primary deficit. And with expectation of increased social spending due to the aging population, the government will need to look to increase their revenue going forward. And therefore, we have a very big postulation that the GST will hike its rate somewhere in the future. Before that, we take a look at what happens in this year's budget. The first step was clearly taken this year when they kept the personal income tax relief of whereby it's kept at 80K per year of assessment. So this is the first step in trying to help them increase their revenue. By capping your personal income tax relief, they actually minus off some of their expenditure there. But if we look back in history, after 2001 general election, GST was hiked not once but twice in 2003 and 2004 from 3 to 4% and 4 to 5% respectively. And the same scenario played out in 2007 during just right after the 2006 general election. Then the finance minister was Taman. He raised the GST to a further 7%, a straight off 2% increase. So our postulation is that going forward, there might be an increase in revenue for the government through increase in GST rate hikes. Of course, all these spendings, what does it do? What does the government intend to achieve from all these spendings? Actually, to help boost the GDP, to help maintain a positive GDP. So as we all know, Singapore economy grew 2% in 2015, and it's expected, based on MES expectation, it will grow at a moderate pace, about 1 to 3% coming this year. Therefore, the total expenditure of 5 billion extra, which is the 7.3% over 2015, will help to create this positive fiscal impulse of 1.1% of GDP. I will go a little bit more in depth into what's called the positive fiscal impulse later. But what I want to share with you here is that we are not sure whether this additional expenditure will be enough to counter the cyclical headwinds that we mentioned earlier. Why is that so? Because we view that in US, Europe, Japan, they are all fighting their own battles against recession and deflation. So globally, the growth rate would slow, as we have covered in our earlier presentation, that it should be a low growth and low interest inflation environment going forward. Next, we have China, which is our next biggest economy regionally within this region, and they are trying very hard to avoid this hard landing as they transit from manufacturing to consumption and service-led economy. So as we maintain our positive fiscal impulse, Singapore output gap has actually continued to diminish as growth moderates. I'll explain further in the next slides here. As you can see, this graph is taken directly from our budget. The blue bar showing a fiscal impulse, and the black line is actually our output gap. A little bit more on the background of what's an output gap. An output gap meaning is our economy producing beyond and above our capacity. A positive one shows that we are producing beyond and above our capacity. A negative one actually shows that we are producing below our capacity. So for the past few years, as the economy recovered from the Great Recession in 2008, you could see the black line is actually above the zero line, which is positive, overall positive output gap, meaning we are actually producing higher than our capacity. But as we go through the years, especially this year, we are seeing actually a negative output gap, meaning we are going to be producing below our capacity. Therefore, you can see actually the blue bar has started to create that physical impulse, meaning the government is actually spending more to create physical impulse so that we can bolster our GDP growth. Okay, next point here we'll talk about for the budget is actually the SMEs. We all know that this year's budget is all about businesses, it's all about SMEs, and we could see from the these six initiative that was mentioned within the budget, why it's going to be a budget for SMEs. First of all, the enhanced corporate income tax rebate. This was generically applied across all corporate income, all corporations, but it was specifically mentioned that it was the enhancement and it was prolonged due to targeting SMEs. Mr. Heng specifically mentioned that it was to target SMEs. And then obviously we have the SME loan assistance scheme, the SME centers, which helps SME to better access all these schemes, the automotive support package, which the government initiated this year under part of the industrial transformation program to allow SME to access loan. All these SMEs Mezzanine Growth Fund increasing, double tax deduction for internalization of scheme, all these that initiative that was started was actually just to help SMEs. I mean, we must be thinking we are in the business of analyzing public markets. I mean, how does SMEs affect us? We will go on to it later, but what we are trying to share here is the 4.5 billion budgeted industrial transformation program, which is further subcategorized under transforming enterprise industry through innovation. All this you can find on the budget statements and power presentation slides on their website. It's easily accessible. We won't go into that, but what we're trying to, our take of this is that the government is trying to push very hard on productivity and automation for one very simple reason. If you look at the equation here, it's a simple equation. Your GDP is actually equal to your labor force participation rate multiplied by your productivity. So we all know what happened to our labor force participation rate. Our birth rate isn't fantastic. It is growing since the year of the dragon. It has been slowly creeping up, but not fast enough. And we all know that we have curtailed our demand on foreign workers. So with an aging population and curtailed reliance on foreign workers, the only way we could actually increase our GDP is through increasing in productivity. Therefore, the government is having a very heavy push on productivity. So to summarize what the government is spending on this year, we have this comparison table for spending on financial year 2015 and financial year 2016. As you can see, it's no surprise that top spending is still on defense, education, and healthcare. And most of these expenditure have actually increased from previous year, except for transportation and cultural communication and youth development, which is here. Transportation is quite simply because the government have invested heavily for the past few years. Therefore, this year they're actually cutting down on their transportation investments. So I think this is what we all wish to know. How does this year's budget impact the public markets? To put it very bluntly, actually, we feel that as it targets the SME, the impact is minimal, but we still see certain impacts as I'll share going forward. So under the construction and infrastructure sectors, the government intends to spend about 2.5 billion into funding this smaller scale construction project, and it's expected to benefit the smaller construction companies. But however, due to the increase in workers' levy, the cost savings from falling material price is likely to be have little impact on the gross margins. And another point to note, point 3 here, Building and Construction Authority has projected that the construction contract to be awarded in 2016 ranges about 27 billion to 34 billion, which is relatively the same compared to the 27 billion that was awarded last year. Construction contracts from public sector demand should cushion the impact from the slowdown in the private sector. as more government spending on infrastructures is expected to be channeled into the civic engineering projects. So for the telecommunication and manufacturing industry or sector, the industry transformation program would definitely benefit these two sectors. Although this is not the first time that Singapore have actually budgeted the amount to boost innovation in Singapore, but we see this as a trend, as a continuous trend for government to continue spending on telecommunications to improve innovation and to create more value within this relevant industry. And as this industry gains traction, we believe that the consolidation between these SMEs manufacturer will help the larger companies with a stronger balance sheet, such as Venture, Singtel, and StarHub, as they could benefit from new acquisitions of these smaller SMEs. Next, we move on to property and REIT sector. So we all know the big news here. The cooling property measures will not be lifted this year as it's deemed to be too premature. So what we essentially are expecting is that the private property price has fallen about 8.4% since the peak in 2013 after the recovery during the Great Financial Crisis. And we expect the private property price to fall a bit further to close to 15 to 20% from the peak before any possible cooling measure can be lifted. This is quite a well-known fact that we will be seeing at least a 20% fall from the peak before cooling measures can be lifted. Sorry, excuse me. So for property counters, we actually preferred more resilient sectors with a bigger discount for buffer, such as GLP. We have a buy call with a targeted price of 2.43 and Hobby Land with an accumulate call and a target price of 2.27. Next, the impact on the bank and financial sector here. The only thing that we see that affects the bank and financial sector, not the only or the main thing that we see that's affecting the bank and financial sector here would be the SME working capital loan scheme. So what this scheme actually does is it provides a loan up to 300K per SME, and the government is actually not front running, is leading this, is taking the lead for this, and they expect the scheme to be a catalyst of more than 2 billion worth of loan. This is, I mean, if we do a size comparison, this is quite minute and not that significant, as it represents only about 2.4% of the outstanding SME loans, which is standing around approximately 84 billion as of Q2 2015. However, if we take the government estimate about this 2 billion worth of loans, which is going to be spread across 3 years and 300K per SMEs, it only implies about 6,700 SMEs will be participating in this scheme. This is a bit conservative, as we have data showing that in Singapore there's actually a lot more SMEs, up to 152,000 SMEs. Yeah, on an NPL perspective, which is the non-performing loan perspective, the 50% co-sharing risk from the government will be most helpful, as the NPL ratio for SMEs have hit a peak of 1.3% in Q2 2015. This is the highest ever seen since 2011. So as NPL creeps up, the 50% co-sharing should benefit banks and the financial institutions. And the co-sharing scheme will also allow participating banks to support viable SMEs that have cash flow concerns or wish to continue growing their business. So all in conclusion here is that the budget is there to help SMEs, and the impact on, we might not see the impact on public sector, direct impact on public sector, but nonetheless we do believe that that few counters and sectors that we have reviewed might have a potential positive or negative impact on the public sector. With that, I think we've come to the end of our presentations. Be willing to take any questions.